Hello, my name is Paul, and welcome to your roundup for the stock market's activities for this past week. So firstly, if we start off with the indices, the S&P 500 advanced by 0.85%, the Dow Jones advanced by 0.65%, the Nasdaq was up by 1.65%, the Russell 2000 was up by 1.36%, and the VIX was down by 6.26%. So that's the American indexes for this last week. So if we turn over to the UK now, the FTSE 100 was up 0.4%, the FTSE 250 was down 0.4%, and the AIM was unchanged for the last week. Now let's have a look what happened in the Treasury space in the US. So the 90-day Treasury was stayed at 5.41% going into the weekend. The 1 year is 5.36%. The 2 year is 4.87%, the 10 year is 3.95%, and the long 30 year is just over 4% at 4.01%. This seems to indicate between the 2 and 10 year that the yield curve inversion is now slowing down as the 10 year advances and the 2 year only upticks in a minor way. There is a 925 basis point gap or diversion between the two. And this indicates that recessionary fears are most likely over, as we seem to have bottomed in that inversion a long time ago, and also earnings have been very strong recently. If we look at the world of crypto, then BTC for this last week is down 2.57%. Ethereum is down by 1.06%. XRP is down a lot more, the worst performing here, down 4.02%. Doge is up almost 10% this last week, going 9.8% to the upside. Polygon and SHIB both also up 7.1%, so some major gains in a few of them there. An interesting story that I thought caught my eye this week was around Bitcoin Cash and Bitcoin SV. The Binance Pool unveiled a Bitcoin Cash mining service, which sent both of them up 8.44% for Bitcoin SV and 5.09% for Bitcoin Cash respectively. So again, more gains in the crypto space. This could be a sign that we are going to see more gains going into the second half of this year and perhaps even early 2024, but time will tell. As far as currency pairings go, we've got these readings for Forex for the last week. So the ICE US dollar index, also known as the DXY, was up 0.43%. The euro dollar down 24 basis points. Dollar yen also down minus 27 basis points. The pound dollar up 26 basis points. And I think this is great, obviously being from the UK. The dollar pound clearly bottomed in October, and we've had major upside. The only downside to this for me personally is US equities. When holding US equities, obviously if the pound is massively rising as it has been these last 9 months, then you're going to see percentage hits to your portfolio as that will eat away. Pound's getting stronger, you can buy less and less dollars, so your investment will erode. So any gains perhaps will decline. Another thing to bear in mind is that actually year-to-date performance, the pound has been very good against the dollar. However, it is actually down 2.15% from its July 13th high from this year to date. And finally, to round off, the dollar franc is barely unchanged, only moving up 2 basis points this last week. And now on to commodities. The S&P 500 Goldman Sachs Commodities Index, also known as the GSCI, rallied 1.8% this week. And if we break that down a bit further, we've got gold moving down by 0.15%, WTI crude, West Texas Instruments, up 4.62%, and natural gas is up 3.62%. I believe the crude is driven by OPEC production cuts and price targets and price caps. And a quick update on the US debt clock, which I think is always an interesting factor to look at. For those of you that don't know, the US debt clock is a website which tracks the spending and revenue of the US government. And as of current, it is at $32.668 trillion, which is an unfathomable amount of money. And it doesn't seem to be slowing down, any signs of slowing down. Obviously, we had the debt ceiling issues in May and June of this year, and obviously that was suspended for 2 years, I believe. I think there's an upper limit, however, I can't quite remember it. Debt doesn't seem to be slowing down at all for the US, and so that's probably one of the good things about inflation, is that it is eroding the US debt down. Nominally, it's the same and increasing. However, in real terms, because inflation is so high, that's brought that down by a lot, especially at 10, 11, 12%, whatever it was that we peaked in last July. Now moving on to some key news and data points from last week. So US Q2 GDP growth came in and it accelerated to 2.4%, which is up from 2% in the first quarter, and a massive beat as 1.8 was the forecast by economists. So the US economy seems to be in a great position, rebounding from coronavirus and also from the interest rate hikes and the 2020 stock market crash that we had, or, well, it's a correction, a crash, whatever you want to call it. Obviously, the big thing that everyone's talking about is the Wednesday Fed meeting. So on the 26th, Jerome Powell came out and we had an announcement of the federal funds rate being hiked by 25 basis points. That now brings the fund rate to 5.5%, which is a high going back to, I believe, 2009. All Fed board members obviously voting for this increase. However, there's a point to make that we have gone incredibly past it, with inflation only being 3%, core inflation being 4.8%. I worry personally that the Fed is raising rates a bit too fast, and perhaps a slowdown needs to come, as they waited far too long to raise rates. Jerome Powell warned of a softening of labour, even if rates stop going up, and even if a recession is avoided. That saw stocks selling off, and the market had a bit of a downturn after that. He also seemed quite defensive about whether or not we'd reached the terminal rate. He said, "We don't want to provide forward guidance on rates," and that is a change from last year's guidance in 2022, when they seemed very adamant and had a clear timeline on what they were going to do with rates, and they were as transparent as possible, I believe. This makes things a lot more uncertain for equities now, and the VIX spiked 13% the following day. And if you don't know, the VIX is the volatility index, which tracks volatilities in options contracts for stocks. As far as other key points that we've got going forwards, we've now got the next meeting for the Fed on September the 19th. Also looking forward, we've got October 4th and September 1st, which are jobs reports in the United States. These will both fall on Fridays. CPI will be August 10th and September 13th. Those are our next two release dates. And given how far we've come, we can be a little more patient with rate hikes. This was also a quote from Jerome Powell. And for me, this is quite bullish. I think the urgency seems to have fallen off in terms to killing inflation. We're already down at 3%, like I said, on 4.8 on core. So yeah, the urgency seems to have gone from the chair of the Federal Reserve. Other guidance that came out this week, we had core PCE inflation softening to 4.1 against 4.2, which was the estimate, so that was a miss. And it wasn't only the Fed which announced a rate decision this week. We also had rate decisions from the European Central Bank and also the Bank of Japan. So here the ECB said that they would be raising rates by 1/4 percentage point, and they also said inflation is set to remain too high for too long. So on Thursday there was a rate increase of 1/4 percentage point, which now puts their main rate at 3.75%. They did not share any forward guidance about its next moves, similar to Jay Powell. However, it did raise the possibility for a potential pause in rate hikes in September. So we're seeing a backtracking almost central banks across in the Eurozone and the United States and Asia seem to have come to the consensus that inflation is mostly over, and we've seen the peak of inflation and we are near the bottom of the curve and now closer to the Fed's long-term inflation goal of 2%, which was popularized by Ben Bernanke, the former Federal Reserve Chair. Inflation is continuing to decline, but is still expected to remain too high for too long, which the ECB came out with on a statement on Thursday. Now moving over to the Bank of Japan, they maintained ultra low interest rates on Friday, but took major steps to make its yield curve control policy more flexible, underscoring growing concerns over a risking side effect of prolonged monetary policy easing. At the two-day meeting that ended this last Friday, the central bank kept unchanged its short-term interest rate target of a peculiar negative 0.1%, and that the 10-year government bond yield would stay around 0%. In its second fixed rate purchase operation of that day, it offered the bonds at 1% instead of the 0.5% level which they offered in the morning. The market reaction to the BOJ decision in Japan was quite volatile across many asset classes. The yen initially reversed gains against the dollar to plunge as much as 1.2%, but then changed its course to surge more than 1%. The Nikkei share average, the N225, applied declines after reopening from the midday recess, which, on a side note, is a very interesting thing that happens in Japan. They've got a 1 hour lunch gap, which I definitely think that other stock markets around the world should implement. But then the stock index extended and bounced back bounced down, I should say, to slump as much as 2.6% on Friday. The benchmark 10-year government bond yield jumped to an 8-year high of 0.575% before easing back slightly to 0.55%. Now moving on to everyone's favourite part of the stock market's activities last week, we've got earnings. So an interesting fact is that 40% of the S&P 500 by market cap reported last week. Globally, this is $27 trillion and $14 trillion in US stocks, which is actually 165 out of the 505 in the S&P 500. It's an ironic name, the S&P 500, considering there's 505 stocks in there. It's always something which has confused me. This is obviously following Tesla and Netflix's reports the previous week, which were both disappointing and saw both stocks fall massively. Despite a few beats for Tesla, the stock did fall quite significantly. So if we start with Logitech, who reported after the bell on Monday the 24th, they had EPS normalized actual at 0.65, which was a beat by 18 cents. The EPS gap actual was 0.39 cents, or $0.39, which beat by 8 cents. The revenue actual was $974,500,000, which was a pretty big beat of 57.16 million. And that's all for Monday. Tuesday, Microsoft reported after. Shares dipped after quarterly revenue guidance missed expectations. Microsoft called for lower revenue guidance than analysts had predicted, partly because of weakness in the segment that contained Windows. Azure cloud revenue growth slowed from 26% to 27% in the previous quarter, surpassing analysts' expectations. The company's research and development costs reclined for the first time since 2016, so almost 7 years. And if we get to some numbers on Microsoft, we've got earnings per share of 2.69 versus 2.55 expected, so we've got a beat there. We've got revenue of 56.19 billion versus 55.49 billion, which is another beat. Q4 intelligent cloud revenue was 23.99 billion, which is another beat against 23.8 expected by analysts. Productivity revenue was 18.29 versus 18.1, so we got another beat there. And our final beat, which makes them all beats, is personal computing revenue at 13.91 billion versus 13.58 expected. So we've got beats across the board for Microsoft. They did mention that they wanted to clear a few things up in the earnings call, which after listening to it back, they did. However, shares did slip the following day on Wednesday. And we also had another giant, Alphabet, reporting earnings. EPS was 144 versus 132 expected. Revenue, which is less than the acquisition costs that we had, was 62 billion, which is a $2 billion beat. And if we have a look at some specific sectors of revenue, we had YouTube ads beating at 7.6 billion versus 7.4 billion. Google Cloud revenue was a 8.38 billion beat. Google's service revenue was 66.29. So we got another beats all round. However, investors not too happy with that one. And lastly for Tuesday, we've got Texas Instruments. So if we have a look here, the earnings out of Texas Instruments, we got a revenue range for Texas Instruments on 4.36 billion to 7.74 billion, and the consensus estimate was 4.59. So beating on the upper end there, certainly within the range that we would like to see for Texas Instruments. However, they saw weakness in its end markets for the quarter and ended exempt for automotive. So again, some bearish commentary from that perspective. EPS for the second quarter was 187 versus the previous year of 2.45. So falling down. And on the top line, we had $500 million for revenue versus a consensus assessment of 4.35 billion. Visa also reported earnings after the bell on Tuesday. So they spoke about in the earnings report about how high rates of inflation are affecting consumer spending, particularly here in the US, perhaps whether international revenue is making up for some of the weakness right now on the third quarter numbers. However, it did remain a beat across the board, and we had EPS at $2 versus $1.60 on an adjusted sales, and also a beat by 5 cents when it comes to net. And when it comes to net revenue, we had 8.1 billion. Analysts were looking for 8.06, so a slight beat there. Total Visa processed transactions were 54 billion. Analysts were looking 53.5. Third quarter across border volumes at constant currency were up 17%. So there's a reflection on how cross-border spending is in a bright spot because customers are swiping their Visa cards abroad wherever they're going. And it's a great sign for Visa that people are still using them and not switching to other payment providers. Now, if we move over to Wednesday, we've got a massive stock, a success story for this year, Meta Platforms. So for Meta Platforms, obviously we're talking WhatsApp, Instagram, and Facebook, and also the new addition of Threads. So if we have a look at the guidance that we were given in the earnings report, we had 3 billion users on Facebook, which was in line with analyst estimates, and EPS for the company as a whole coming in at 2.98 versus 246 on a year-over-year basis. Revenue in the quarter coming in around 31.5 billion, which is a slight beat, which compared to what the street was expecting. And their guidance going forward for the third quarter essentially says that they're looking at 32 to 34.5 billion. That's the range that they're giving. The low end of that range of 32 billion is above the average street estimate, massively surging in post-market trading. It did end Thursday and Friday up 4% on both days. However, in post-market trading on Wednesday, it was up almost as high as 10%. So we did see a little bit of selling off going into market open on Thursday. Intel on Thursday is the big name, and actually the last name that we're looking at earnings for from last week. So the numbers coming out of Intel for Q2, revenue was $12.9 billion, and the client computing revenue, the component, that was a beat, and that accounted for 6.8 billion of the revenue figure. The company is also saying that for the third quarter revenue on an adjusted basis will come between 12.9 and 13.9 billion. So 13.4 is the midpoint there. The average estimate on the street was 13.3, so a $100 million beat. So the high end of that range would be a beat, the low end of that range would be a miss. Also saying the it's remaining on track to deliver cost savings in 2023 of about $3 billion. So if we look forward to some data, which we'll be getting out next week from the government in the US. On Tuesday the 1st, we are expecting at 9:45 the S&P final US manufacturing PMI for July. And we've got an estimate of 49.0 and a previous of 49.0. And at 10 a.m, 15 minutes after, we've got job openings for June, and the previous was 9.8. We don't have an estimate yet for that, but we are obviously hoping for a beat. On Thursday, the 3rd of August, we've got initial jobless claims at 8:30, and that is for July the 29th, and the estimate is 227,000, which is an increase of 6,000 in initial jobless claims. On Friday the 4th of August, we've got quite a few data points to look forwards to. At 8:30 there were as well, so we've got a lot, and they're all in relation to wages. So at 8:30 we've got non-farm payrolls, unemployment rate, hourly wages, and hourly wages year over year. So we start with non-farm payrolls. Previous was 209. We're looking for 200. Unemployment rate, we're looking to stay constant at 3.6. Actually, quite interestingly, unemployment has been similar and has barely moved since rate hikes began in end of 2021, start of 2022. US hourly wages, we're again looking for a 0.4% increase, same as last month. And hourly wages year over year previously were 4.4%. And that remains constant as the guidance stays the same for this month. And now another personal favourite of mine, we are going to be looking at earnings for next week, as it is earnings season. It's like Christmas coming once every quarter. So on Monday we've got Sony, which is the only company that I'm looking at personally. So we've got an EPS estimate of 141.57 versus the previous of 176.46, so a slight dip there. So for Sony, we're looking for 2.4 billion versus 2.3 billion, which was the previous. And that will be before the opening bell. On Tuesday, there's a few names. I can go through them. So we've got Merck & Co, we've got Pfizer, we've got AMD, HSBC, Caterpillar, BP, Starbucks, Uber, and Diageo. So there's quite a few to be looking out there. I'm mainly going to be focusing on AMD, Pfizer, and Starbucks for me. Wednesday, we've got Toyota, CVS, Shopify, and my favorite stock at the moment, which is PayPal. And we've also got Qualcomm earnings in there. So if we have a look at some of the estimates, I'm going to go through Shopify and PayPal. So Shopify is expected to come in with 0.07 EPS, which compares to the previous of -3 cents a share. We're looking for earnings of 1.63 billion versus the previous of 1.3. So pretty significant uptick. That will be after the bell. So PayPal also after the bell, we're looking for $1.15 per share, which will be up from 93 per share in the last earnings cycle. Revenue, we're looking for 7.27 versus 6.81, which was the previous. And as I'm sure some of you know, PayPal did beat on its earnings last time, however, fell massively. So hopefully we're looking for a surge here. It's up about 20% from its bottom in May. And last but certainly not least, we've got Thursday earnings. There's nothing significant on Friday, so the last earnings I'll be paying attention to are two of the biggest companies in the world, both starting with A. We've got Amazon and we've got Apple. Apple obviously has recently hit $3 trillion in market capitalization, and they are also looking for strong earnings. So we start with Amazon. We've got a 0.5 EPS estimate from analysts compared to a negative 20 cents from the last quarter, which is very interesting actually. I did not know that Amazon was still loss-making on an EPS basis. And revenue, obviously, we're looking for massive revenue numbers from Amazon. We're looking for 131.45 billion versus the previous of 121.23, so about a $10 billion increase, and we're looking for that revenue to stay growing as we move into the third and fourth quarters. Obviously, Prime Day is behind us now. We are looking for some guidance on how that went well, or if it didn't, considering inflation and also consumer spending, which seems to be remaining strong in America. But we will see. Amazon is a great metric to see how the consumer is doing. So finally, we've got the big dog, we've got Apple. Analysts actually expect the EPS to go down by 1 cent to $1.19. This compares to $1.20 the previous quarter. And revenue also to decline by about 1.2 billion from 82.96 billion the previous quarter to 81.73 billion, which is the analyst estimate. So even a slight beat, even a slight loss in revenue, a decrease in revenue, if it's above that 81.73 billion, we could see surge in Apple. If it's anything above 1.19, I think we're going to see a good 3% increase in Apple on the day. Both of those coming after the bell, and incredibly that those two companies alone are about $4.59 trillion of market capitalization reporting after the bell alone on Thursday. So that's the recap for the stock market's activities last week and my look forward to next week. I am going to continue to post videos every day to essentially summarize the big movers, big stories we've got for each day. And yeah, thank you so much for watching.